Welcome back to the Future Show here on the Schwab Network. Less than 60 minutes from the cash open for stocks on Wall Street. So let's bring in our next guest. That's going to be Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Welcome back to the show, Alan.
Good morning, Tom.
Good morning. We got jobless claims that just hit. Got some breaking news. I think it's coming in at about 225,000 at this point. Alan, what's your take here? Because, you know, the Fed's focused on jobs right now, right? And we haven't seen any cracks as of yet. Better than expected ADP yesterday. Non-farm payrolls tomorrow, but 225 kind of right in line with what expectations were.
Yeah, the trends remain the same. Nothing's changed. We'll see some action tomorrow, obviously. But what you were mentioning is that a lot of times these are short-lived reactions, as opposed to when we were younger traders. You know, the monthly unemployment number used to be the big deal that kind of drove the month. But we just have kind of limited reaction nowadays, and we move on to other things.
Yeah, I think that, you know, these numbers on a weekly basis give us kind of a clue on what the Fed's focused on. But, you know, if we're not going to see those cracks in the labor market, what if tomorrow comes in at 4.1% unemployment rate, you know, and the Fed's kind of focused on that? Then that 25 basis point cut in November and December comes into play, right? Is that the expectations the market has, or does it want that 50 basis point cut in November?
Well, I think the market wants the 50, but, you know, again, this is a lot of mental anguish that you put yourself through trying to figure out what people think. My father's a psychologist, and I know not to try and read people's minds. I trade what I see, and I see a strong trading market. We have not made new highs in the S&P this week, whereas we did last week. So let's see where we stand, but it's another week where we haven't made new highs. But I want to point out to your last guess, I like the dollar commentary. But the one thing to worry about, he's not worried about the gold market continuing to make new highs and new highs, but he's worried about the S&P making new highs and new highs for whatever reason. But I do want to point out that the PE ratio right now, even though the market's making new highs, is much lower than what it was in 2022. So we still have more upside just to achieve what we had before. So stocks in relative terms are actually cheaper.
Yeah, but if you look at that, Al, when we got, you know, a little bit overcooked in there in 2022, we started seeing a slide in the market at this point, because that forward-looking PE for the S&P 500 on a historical basis is getting pretty rich. Do we need the earnings events that are coming up over the next couple months to kind of solidify that optimism that the equity markets have at this point?
Yeah, and we're going to start out with the big banks. And if you look at something like JP Morgan, the PE is 11. So there's a lot of upside in a lot of these financials. And they're going to talk about the billions that they're making. They may complain a little bit that they're not getting their free money on their assets, you know, their return on assets from the Fed. You know, but it is what it is. They print money. They're doing very well. And then obviously we're going to hear about the big boys, you know, how much billions and tens of billions that we're making a pure profit when you talk about Apple and Meta and Google and all the tech stocks. So when it comes to tech, if you can get NVIDIA and Google will come back, that's going to send that market to new all-time highs and much, much higher.
Yeah, and that's kind of what my thesis earlier this show was, that I looked at NVIDIA yesterday, the chart on that. It's getting a nice little pop today on some commentary from the CEO. And I've been telling people that we're not going to get that next leg up. And I think you told me 6,300 by the end of the year last week. We're not going to get that leg up, that next leg up to record highs and maybe 6,000 and above, unless the tech sector leads and takes over that leadership, right?
Right. And it always has. It's had a pause. So let's see with this rotation. So we talked about other segments of the stock market. Let's get to oil, obviously. That's a big conversation. XLE is the ETF that tracks oil. So I want to bring this, you know, to your show a little bit. Now, it all comes back to commodities. Now, XLE, the ETF, has actually led crude oil. And if you look at the chart, it's more impressive. It had a breakout yesterday. So if we can follow through on the breakout that we had on XLE yesterday, that can be a very, very positive sign. Again, we've talked many times that 75 is the pivot for the last 2 years in crude oil itself. And, we've had a nice little bounce off this bottom. And when we were on last week, we talked about how in individual stocks, we saw what I look for as bullish divergence. Apache, Halliburton, Oxy, and Schlumberger all made new lows, but did not make new highs in implied volatility. So that's very much a positive of a sentiment shift. I didn't know what was going to cause that, what would be the catalyst, and I don't care, but you can see that those stocks have all firmed up more than crude oil has.
Yeah, and we had that chart up of crude oil versus the XLE. We got some big, oil stocks within that XLE, and ExxonMobil is just a couple percent below its all-time highs, even though crude oil is languishing under $72 a barrel. Alan, a lot of people have been saying, hey, maybe there's opportunities in Oxy and some of the other ones that have underperformed, but then there's been some names that have actually done well, even though crude oil is lagging.
Right, and if you don't want the individual stock risk, you can trade the ETF, obviously. But I love the risk reward in Oxy. I love the risk reward in Schlumberger. So as an options trader, I can buy some in the money options and buy 3 months time and have some high probability positioning. Very much the same as far as risk reward. Last week we talked about some of the miners and the metals. We talked about GDX having much more upside than gold itself because we're like 30% away from the all-time highs in GDX, whereas gold continues to make new highs. If you look at the XME, the metals and miners ETF, it exploded last week, rallied all the way up to its highs. So the stocks like FCX and Alcoa, have been lit on fire. So there are segments here that have been playing catch up, and it looks like a breakout of that top of that range could really send that sector higher once again.
Yeah, and you mentioned that XME chart, and it had been lagging a little bit, but now you're starting to see a resurgence in silver, starting to see a resurgence in copper a little bit, which lifted a lot of the names within that ETF. And the dollar is still firming up over the last few sessions and not really, just kind of capping gains.
Firming up is relative. We're sitting here at 101. We dipped below 100 for the second time. So yeah, it's not going down, but I wouldn't really say it's going up. Let's talk about one more metal. Let's talk about platinum. They're selling platinum at Costco now.
I saw that.
when I was younger, platinum used to be double the price of gold. Platinum peaked out at 2,000. It's sitting at 1,000 right now. And for the year, it's been trading between 900 and 1,100. And we're right now at that 1,000 pivot. We'll move above that 1,000 pivot. So, you can see that stock, that market make a nice healthy move. And I think people have forgotten about platinum. Obviously, it's very industrial, but it could come back like copper. The chart in this is very comparable to copper being at the midpoint of the range for the year.
Yeah. All right, Al, before we let you go, give me your take here. Equity market optimism. What are you telling investors out there? Because I know you're bullish.
Yeah, I'm bullish, and why not? How can you not be bullish? Everything is positive. The trend is positive. Picking the top of the turn is a fool's game, and just go with the trend. But you've got to be selective. You've got to find the pockets that maybe haven't participated in the bull run to such an extent. And again, your NVIDIA is a great example that has had a pullback. It's had a second chance opportunity after many, 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 many chances. And it's about risk reward and being selective. In these markets. Keep an eye on silver. We talked about silver again last week. Nothing happening this week. But if you look at SLV, the ETF that tracks silver, it's up, butting its head against the top of this range. If it could break out, you can get a quick move in the silver market.
Yep, definitely making some inroads and trying to play catch up here in the gold market also. All right, great discussion.
Snapback attack.
Snapback attack, I like it. Thanks to Alan Nuckman, Chief Market Strategist at BullseyeOption.com for joining us, breaking down equity markets. We've got some data also with jobless claims coming in line. But now let's bring in Jenny Horn, market